No, it's pretty good. Why is it? Yes. So yeah, that's good. I do like my 2 hours. Oh yeah, so it has a
Okay, let's start.
Yeah, let's do
Ready?
it. Yeah, let's do it.
Okay, guys, good afternoon. Attention, please. Hi, how are you today? Thank you for coming to another Georgia event. Who's coming to Georgia for the first time? Raise your hand. Okay, a lot of familiar faces. Thank you very much for coming to another event. Today we're having a crypto event. We haven't had crypto event in a while, and it's the first after a month or two, I think. So we have John here. We're going to talk about, give applause for John. We're going to talk about crypto market in 2019. The event will be about 1 hour. So honestly, guys, it's the first crypto event that I hosted. I don't know what to expect. Please don't kill each other. There's a lot of people here. Yeah, so let's try to make this event peaceful. And then, sorry, I hope everyone fit in because we're running out of stuff today, and a lot of people just come and don't register, so we don't expect this many people. I hope you're still comfortable in your seat right now. Apologize in advance. The event will be about 1 hour, so 45 minutes talk, 15 minutes question and answer. But if during the presentation you feel like asking something or interrupting or stating whatever it is, feel free to. Please speak a bit louder so that everyone can hear what you're saying. If you're a non-member, please make sure that your hotspot in your phone is turned off because it interferes with our Wi-Fi and making our connection slow. So make sure that it's turned off. Okay, I think that's all from me. I'll give it to John. Enjoy the event. This is John.
Yeah, hey everybody, welcome. Thanks a million to Auntie for organising the event. And of course, thanks to all you for coming. Wouldn't be possible without you. It's cool to see that crypto is still a popular topic, even though prices were down throughout 2018. So just to start off, I want to kind of get a bit of a gauge of the level, because I know a lot of people here have a bit of a background in crypto. So raise your hand high if you own Bitcoin. High, high, high. Keep your hand up if you held Bitcoin from 2018 or earlier. 2017, 2016, 2015. Okay, you need to be friends with all these people. So who am I and why should you listen to me speak about crypto? I have been working full-time in the crypto industry since the start of 2018. Prior to that, I was working full-time in finance. I was involved in a derivatives trading firm and also worked for a NASDAQ listed firm. Well, actually, I just hated office life, and I was just spending a lot of my day reading articles from CoinDesk, Cointelegraph, because I found the technology and Bitcoin super interesting. And at the start of 2018, I just took a big risk. I left my job, moved to Lisbon, and have been working in crypto ever since. I now own a content and research agency, Adaptive Analysis, and we work with many news outlets, many clients that need research on cryptocurrencies, blockchain, and some of the value we provide as well is with my background in finance. I have a more of an understanding for how markets work and some of the theories driving markets. So what we do is we apply this to cryptocurrencies. So what, if anybody wants to volunteer, what are we expecting from this talk? Why we showed up? What are we looking to learn? Anybody at all?
Okay.
Yeah.
I met someone in Costa Rica a few months ago who is big into cryptocurrency, and I'd say every second post on Facebook is like, why is nobody involved with this? So I've come here today just to learn about it.
Cool. Anybody else? Yeah.
So kind of half joking but not joking. Is crypto winter over?
Okay, that's a very good reason to come. Yeah.
I have a friend who's been investing in them, and I don't know any kind about them. Just like a few things that I've been reading here and there. So for me, just getting to understand what it's done.
Okay, great. Well, how this presentation is going to be structured is the first half is going to give a background of cryptocurrencies and the evolution of the market. The second half is going to be more intermediate. We're going to talk about things such as your question: is crypto winter over?
Sorry.
Well, no worries. But not just that, we're going to be using like data and research to back up the opinions which are presented. So we have Mama making it clear.
He needs to learn. You want crypto?
Do you have Bitcoin, Mama?
Yeah.
So let's start off at the start, an evolution of the market and how crypto came to be what it is today. So it's actually not a new thing. Way before cryptocurrency, many companies were trying to make digital cash. All these companies had their own form of digital cash, but they all ultimately failed. And they all have one thing in common. Any ideas what that is?
Double spend.
Double spend.
Decentralized. Centralized.
Yes, yeah, exactly. They're all centralized. So essentially, if a company wants to build digital cash, they are going against the state and the government, which is linked to the central bank, because the central bank issues its own fiat currency. So they don't want any competitors. And the reason Bitcoin has survived to today is because it is decentralized. It's not subject to the whims of any big state or any big company. If any big company or state tries to change the network or force itself on the network, it essentially can't do it because the network is run by people all over the world. At this stage, it's so decentralized that we have nodes, we actually have satellite nodes running in the sky that are keeping a copy of the ledger. So here's the idea that was first proposed. A peer-to-peer version where anybody could send electronic cash to anybody else without institution, without needing trust. How was this established? So the system which was proposed by Satoshi Nakamoto, which achieved what many other companies tried to do before, was blockchain technology. But when we say blockchain technology, it can mean many different things at this stage because there's so many projects coming up with their own blockchain systems, etc., etc., etc. But today, the most secure and the most proven of all these systems is the proof of work system. And how does it work? Essentially, we have a distributed network where everybody in the network is keeping a copy of the ledger, and anybody on the network can send transactions to anybody else. And we have these special type of computers running the network called miners. These miners essentially compile transactions together. They append it to a ledger, which is immutable, can't be changed. And for doing this, they get a reward of newly minted Bitcoin. And they also have the reward of benefiting from user transactions. So if I want to send a transaction and I want it to be a high priority, I'll attach high transaction fees to this. So miners receive these transactions and they also receive newly minted Bitcoin. But why is this secure and why does it work? Well, essentially the mining business means that the miner's performance and business model is extremely tied to both the value of Bitcoin and the value of the hardware they run. They run this special type of hardware called ASICs. If their ASICs can't mine Bitcoin or essentially lose their ability to mine Bitcoin or Bitcoin becomes worthless, these hardware can't be used for anything else. So their balance sheet is tied to both the currency and to the hardware. So they are extremely incentivized to always keep the health of the network in their best interests. If the miners ever do anything which is not for the best interest of the network, the value of Bitcoin will theoretically go down and it will hurt the miner's business model. We've seen this very, very recently in a hack last month, which took place on the biggest cryptocurrency exchange, Binance. Binance was hacked for 40 million. And actually the CEO of Binance, Changpeng Zhao, tried to collude with a few miners to organize a reversal of the ledger where the hacked transaction wasn't going to be hacked anymore. And we actually seen absolute outrage take place on Twitter, where everybody voiced that this is completely against the principles which Bitcoin is based on. And essentially what happened here was the users on social media and the users on the network made a very important communication. They said that they hold a lot of value in the immutability of the ledger, and that if the miners colluded together and changed the ledger, that the value of Bitcoin will go down. So it's essentially serving to incentivize the miners to keep the ledger as it has always been.
Sorry, it's a dog.
No worries, no worries. So what do we have here when we put all this together? We essentially have a value proposition that Bitcoin has let Bitcoin stay in existence until today. The network is censorship resistant. It can't be influenced by the state or a company. It's immutable. Once transactions go in, they shouldn't be changed. It's theoretically immutable, or it's theoretically mutable because it can be changed. But what's happening is there's so many computers working to keep it immutable that there's very, very strong power behind this, the ledger not being changed. We also have a trustless system. If I want to send one Bitcoin to Antti, I can send one Bitcoin to Antti, and I don't have to worry about what Dojo thinks about it. I don't have to worry about what the Irish government, Indonesian government thinks about it. It's decentralized. The miners are incentivized to process this transaction, and they're going to do it if it makes sense. So a quick evolution of how we got to where we are today. Essentially, the first couple of years of the Bitcoin network, was just being run by miners and like some geeks that were just like essentially sending transactions to each other. And nobody really knew about it. The network launched in 2009. The idea was proposed in 2008. And it actually was the end of 2009 when we got the first market for Bitcoin. A company called New Liberty Standard bought some Bitcoins and created a market. And any idea what the first ever quoted price of Bitcoin was?
Jesus, $35.
So that was the first ever purchase, but the first ever market where you could exchange fiat.
15 cents.
It was 7/100ths of 1 cent. That was the first ever market for Bitcoin. The first ever purchase happened shortly after in 2010, where someone used 2,000 or 10,000 Bitcoin to purchase 2 Papa John's pizzas. So they were 2 big milestones. We have the first ever market and the first ever medium of exchange purchase. In 2011, we had the first ever altcoin, which served to make it a more liquid market because people could trade between Bitcoin and the altcoin. We also had Mt. Gox created in 2010, and a huge run up to over 1,200 taking place on Mt. Gox, which was actually found out later that it was built up by a bot and not really supported on the blockchain. But Mt. Gox was hacked then in 2014 for about 460 million at the time. We've seen a huge crash. People obviously thought Bitcoin was dead, but it wasn't dead. And we've seen a lot of new projects then start to come into play in 2015. There was like a boom in altcoins. There was this narrative created that is still going today and is still extremely debatable, is like blockchain, not Bitcoin. Is blockchain the really revolutionary technology, but Bitcoin is always going to be on the fringes? And that narrative is coming under a lot of scrutiny today, and we're going to explore that a bit more. We also had Ethereum launch in 2015. It was the first ever project to do something completely different than Bitcoin, use a completely different programming language. And then in 2017, a lot of us will remember, we've seen a huge run up in price, where price ended the year over 20,000. And this served to do a lot of good things and a lot of bad things. It gave the projects a lot of mainstream attention. A lot more people know about cryptocurrency and Bitcoin today than before 2017. But a lot of people also got stung with scam projects, with people just trying to make easy money off of the public hype. And then in 2018, we've seen a long decrease in prices. And this is essentially a market shakeout. It happens in traditional markets as well, where people capitalize on getting easy money, but what they're proposing doesn't really have a value proposition. So when the funds aren't easy to come by, they essentially can't support their business model and they go out of the market. But all throughout this period, even though the prices were declining, on the strong projects like Bitcoin, we've seen constant development and constant improvement. And we're seeing prices come up again, and we'll go over some of the developments which happened over this span of 2 years. So all throughout these years, the protocol itself and what it does has been changing. Does anybody know how the system, which is Bitcoin, actually changes?
Consensus. Consensus.
Consensus, yeah, good answer.
Via forks.
Yeah, also an idea, good enough answer. It's essentially what happens is there's like a long and scrutinous process where somebody proposes an idea to change, but because the network is run by computers all over the world, you can't force all of them to upgrade. You need to essentially convince the vast majority to upgrade, because when the vast majority doesn't upgrade, we have like a huge split off in the community, which is a fork, and it's very risky because Bitcoin is a very experimental project. It's only exists in 10 years, and essentially what it's doing is it's proposing to displace a money which has been around for hundreds of years and is run by the most powerful entities today, which are states. So essentially, Bitcoin needs to be extremely cautious in its approach. And if it tries to upgrade and like 50% of the network decides not to upgrade, then we'll have a fork, and a key part of the community is going to be forked off, and it won't be driving support behind the project. What about altcoins and other blockchain projects? How do they launch and how do they change?
ICOs.
Yeah, that's one way. People fundraise to fund development of a project. Any other ideas?
Applications, real use applications.
Yeah, applications get built on top of the network once it's launched. So essentially, the code for Bitcoin is open source, so anybody can take it and anybody can change it and have their own blockchain just like that. Also, yeah, they can fund development and build their own network from scratch. That's what Ethereum did. They can propose a change to the protocol, and if nobody agrees, they can still fork off and upgrade their own node, and they have their own blockchain. But what they can't do is they can't replicate the amount of support behind Bitcoin. They can't replicate the network behind it, the brand recognition, the 10 years of hard work, the mining support, the community support. All of these things can't be created like that. They take a long time to build, and essentially when altcoins are created or other types of blockchain projects are created, they're competing against every one of these things. And how do they compete?
They don't.
Good answer. I like that answer.
They're much cheaper. How's the Bitcoin dominance done over time?
How's it done over time? It's went
Dominance,
from, yeah, it's 55% at the moment.
Yeah, so what happened when blocks got full? What happened to dominance?
Dropped to like 30%.
Yeah, exactly. So I mean, I'd say there's a lot of competition from altcoins, and I mean, you like Bitcoin, but Bitcoin had the entire market until the blocks got full, and now the market's exploded into a million things. So it's actually quite an interesting time. Bitcoin gave up the first mover advantage, so now the game's open to whoever can win.
Okay, really nice and really interesting angle we have here. So altcoins compete on features, but to make these features, oftentimes they have to make trade-offs. Let's take Bitcoin Cash, for example. The proposition was very simple. By on-chain scaling, by increasing the amount of information we can have in blocks, we will have a more efficient and a more scalable network. Nobody argues with that, nobody at all. But what people do argue against is the trade-offs which are made. Key trade-offs are made with security. And we've seen this very recently. On the 15th of May, a 51% attack happened on Bitcoin Cash. Bitcoin Cash is the fourth biggest public blockchain in the world. And a 51% attack is essentially where the ledger is reversed and transactions which had already been included in the ledger are spent again. And this was conducted by two large mining pools on the network. So essentially, it's given up some of the key value propositions that Bitcoin initially proposed. If we go back to the value propositions, it's like censorship resistance, it's immutability. But oftentimes, it's very interesting when we have these projects. They're proposing really good things, but trade-offs are made, and that needs to be bared in mind.
What did Satoshi say about raising the block size?
Satoshi maybe said something in 2010 about raising the block size.
Yeah, so
I'm sure you know.
Satoshi said once it got close to the 1 megabyte limit, raise it at a certain block. So have we done that?
No.
So are we following the original design of Bitcoin?
Well, the original design is not necessarily what Satoshi says. It's left up to the community to decide.
Interesting.
Yeah, so like it's
what's the first title of the white paper? I mean, the reason I say this is there's two sides to this. I want to
Yeah,
make
of
sure. I mean,
course.
everyone should make their own decision.
Yeah, of
about
course,
what's
of
what,
course.
But I mean,
I'm trying to give the two sides here.
cool.
Yeah.
Which is good. I just want to make sure that we see that.
Yeah, of course, man, of course. So yeah, it's very interesting. Essentially what's being said here is like, is Satoshi's vision the be all and end all? I'm saying it's not. It depends on those who are running the network, those who are running the nodes. But there's a lot of people who go back to what Satoshi originally said, and they say we're not following this. And for this reason, we have Bitcoin Cash and we have Bitcoin Cash SV. Well, I'm also saying that Bitcoin Cash has been 51% attacked, which is super, super bad. But yeah, lots of people think that this is the right approach and some don't. Yeah, we went over that. And we also have Ethereum, which is really, really interesting, used a different programming language to make it really easy to build applications on top of the protocol. And essentially with the vision of Ethereum, we're saying that by putting applications on a decentralized protocol, they're gonna have benefits. They're gonna have security benefits. They're gonna have the benefits of trustlessness. But in reality today, what is happening is oftentimes we're making another trade-off. We're losing the benefits of being on a centralized system, which means transactions are being super, super fast, but we're also losing the key security properties of a decentralized protocol, which is a huge amount of computing power supporting it and lots of different nodes. We also have tokens, which were huge in 2017. So the idea of tokens is another really interesting one. A lot of people think that everything is going to have its own token and everything can benefit from having a token. I would argue that as markets have developed, they've always converged on one currency. And the value of an application is actually different than the value of the currency. So currencies are typically valued by like their network effect. How saleable are they on the market? And that's why like all the fiat currencies are backed by the US dollar, etc., etc. A lot of these projects could use Bitcoin or fiat currencies in their applications. But the reason they issue a token is to access the easy money, which is on the market. But also another highly contentious topic. But no matter what you think of these topics, Bitcoin Cash, Ethereum, tokens, at the moment we can't argue that Bitcoin is the market leader. It represents 55% of the market cap and it's the bellwether of the industry. Returns of all altcoins are highly, highly correlated to Bitcoin, and there's a lot of research to back that up. So let's look at how Bitcoin has evolved over the past 2 years. Although prices crashed in 2018, the amount of computing power by miners over doubled. The amount of computing power run by miners is essentially a good gauge of how secure the network is. Because if there's a lot of computing power supporting the ledger, it takes a huge investment of hardware to try and get enough hash rate to manipulate the network. But that only tells half the story, because if we have a lot of hash rate but it's owned by only a small number of entities, the network is still highly vulnerable to manipulation. And in Bitcoin, it's very interesting as well because Bitmain are in control of Antpool, they're in control of BTC.com, and they're also an investor in Via BTC. In 2017, at one point, these three pools represented 50% of the network. So very, very close to the 51% point. If one entity gets 51% of the network, they can do what was done on Bitcoin Cash, which is a double spend attack. However, since then, it's gone down to about 34%. And also, Bitmain are such a big player in Bitcoin that if they were to launch an attack on the network, it would be very, very bad for their business model. At the moment, we see about 3.5 billion going through the network. At the peaks in 2017, we've seen 14.3 billion go through, but that was amid a speculative frenzy and also huge, huge prices. But since 2017, we've seen a lot of developments take place on the protocol. We've seen the Lightning Network, which is one of the most promising developments to take place, which is essentially an app, another network built on top of Bitcoin, which can make transactions happen super fast. And then after these transactions happen within a channel, they come back to the main chain for settlement. Although it doesn't have the same security as the main chain, it's an interesting bit of competition to altcoins because it helps transactions happen super fast, but also coming back to the security of the main chain after the transactions happen. We've seen other developments such as Segwit, Liquid Sidechain, and there's more developments being proposed. The propensity to purchase Bitcoin has also increased. In 2017, 19% of people believed they'd purchase Bitcoin within the next 5 years, and 27% today believe that they'll purchase Bitcoin within the next 5 years. Who here is going to purchase Bitcoin within the next 5 years? Okay, seems like maybe 20% or so. We've seen on-chain transactions approaching peak levels in 2017. On-chain value isn't like the amount of USD which is being transferred across is still a lot lower, but on-chain transactions are near peak. Just because the value in the market is lower today means the USD value is lower. But outside of Bitcoin, what is happening? We're seeing a bigger focus on the data which is being provided by companies to be more accurate. A lot of research and a lot of revelations have happened where we've seen that actually the data being provided can be very inaccurate. Bitwise earlier in the year presented to the SEC and they reported strong evidence that 95% of the volume reported by exchanges is actually artificially produced. And it makes a lot of sense because how does an exchange compete? What they do is they propose a liquid market, then traders come to the exchange, and then they get the trading fees. So essentially a lot of exchanges have artificially pumped their volume figures by using bots and also doing watch trading where they're buying and selling their own instruments. But we've seen a lot of companies come up and tackle this. We're seeing companies like Mazari are creating registries where projects can register with them, and then they need to have transparent data to be a part of the registry. We're seeing Coinmetrics, which is a huge data company, get funded by venture capital and launch premium services. We're also seeing even CoinMarketCap, which is notorious for reporting bad data, have a new transparent policy. Other trends which are happening. Regulation is like going backwards and forwards at the same time. We're seeing some places put forward laws to try and attract blockchain businesses. We've seen Malta and France put through laws last year to try and attract businesses. But we're seeing other countries going the opposite direction. China recently was talking about banning crypto mining. We've seen Japan put forward more stringent laws. And a really interesting thing which is happening right now is there's this intergovernmental organization called Financial Action Task Force. It's made up of 38 governments, and they're putting forward a bill that essentially would make any business dealing in any type of virtual asset do really strict KYC. Because when someone runs a crypto business, like let's say a wallet provider, for example, anybody can like set up a wallet and send anybody else a wallet. So it makes the KYC extremely difficult for a lot of virtual asset service providers. So if this law goes through, it may push like the adoption on the business level back a few years and may push it more to people who are just using the network. That's an interesting one and one to keep up to date with. The bill isn't for sure going through yet, but if it goes through, it could cause some issues. So to finish off, I know a lot of people are interested in prices and interested in the market, so I want to go over some techniques and some theories you can use when analyzing the market. First of all, there's the concept of beta and alpha. So beta is essentially when you achieve the returns of the market. You buy a basket of instruments, you hold it, and you get the return of the market. When you start conducting analysis and playing around with your portfolio and playing around with your holdings, what you're doing is you're seeking alpha, which is a zero-sum game. So if you gain an extra 10% above market, that money has to come from somewhere, and someone else is losing that money. So you need to bear in mind that when you're doing analysis and when you're doing very, very active trading, what you're doing is you're trying to get alpha, and you're competing against the best people in the game. And only about 10% of people can win in the game, which is active trading. Yeah, it's funny. No worries, no worries. There's another key thing to bear in mind with the crypto market is a super, super early stage. It's only been around for 10 years. The equities market has been around for 400 years. So over these 400 years, essentially what's happened is analysts and the industry and the institutions around it have converged on fundamental theses, fundamental valuation models that everybody across the industry agrees with. And that's why when we have something like an earnings announcement and the earnings like vary slightly from what analysts have estimated, we will see the price adjust super quickly because the whole industry is basing their models are on the same models. So if it's outside these models, price is going to adjust to reflect this. However, the crypto industry is only 10 years old. The market for Bitcoin is less than 10 years old. So at the moment, it's very, very trend driven. And we see this in a lot of strategies and a lot of research. For example, this research done by Elm Fund shows a long Bitcoin strategy versus a momentum-based strategy. This red line here is just buy Bitcoin and hold it. This strategy here, which outperformed by a factor of 3, what happened was every time Bitcoin dropped below its average price over the past year, they converted to fiat. And then when it rose back above, they converted back to Bitcoin. And it outperformed by a factor of 3. And the nice thing about it as well is it's only one trade every couple of years. For anybody who was in Ubud last week as well, where Willie Woo was presenting, he talked about the 200 SMA. I haven't run the numbers on myself with this one, but it's essentially the same idea. With the last chart, it's the 365-day moving average. Every time it goes below, you convert to fiat. Every time it goes above, you convert to Bitcoin. And with this one, it's the 200 SMA. Every time it goes below, you convert to fiat, and every time it goes above, you convert back to Bitcoin. And with the numbers on this one, when markets were crashing last year, you would have got out around 9,000, and you would have entered in last month around 5,500. Yeah.
I'm just curious, was Willie Woo bullish right now or no in the presentation?
Yeah, he said 99% sure that we're in a bull market now, based mainly on price being back above the 200 SMA. Yeah.
Willie's legit.
Yeah, Willie is legit.
Yeah.
Willie is legit. He's doing another presentation tomorrow in Ubud in Blockchain Zoo for anybody who's around. So yeah, all this trend-based nature of the market makes technical analysis a very, very viable strategy to identify the trend, to try and spot opportunities to get in and get out. But yeah, as with any market, it's extremely, extremely difficult to get returns above the market. So always bear that in mind. On-chain analysis is another extremely interesting form of analysis. Willie Woo talked a lot about that as well, and I would suggest going to his presentation tomorrow if you want to know a whole variety of on-chain analysis techniques. On-chain analysis essentially uses the data from the actual blockchain to inform your investment decision making. One on-chain analysis technique which I find extremely interesting is market capitalization versus realized market cap. So the market cap is calculated by multiplying price by supply. Because the supply is only gradually and slowly increasing, this metric, which we see in blue above, is highly subject to the speculative nature of markets. If people push price down 10%, the market cap effectively goes down 10%. However, realized cap, how you calculate it is you multiply all the transactions in the ledger by the price at the time they were sent. So essentially and add them all up together. And essentially what we're getting here is we're getting the value the long-term holders bought their Bitcoin for. So when the market cap drops below the realized cap, which we can see here, here, and recently here, it essentially indicates a very strong time to buy, because it indicates that the long-term holders, their value is actually underwater. The market is depressed so much that they have actually bought at a loss. And the 3 times that happened turned out to be really good times to buy. And it happened as well just last month prior to the run-up we've recently seen. Fundamental models is, as the industry develops, it's believed that the market will converge on fundamental models, very similar to the way the equity markets are, where every analyst believes in the same way the value of crypto network. At the moment, the fundamental models which are proposed are really, really rough and based on a lot of assumptions. If you want to venture deeper into the area of fundamental models, the leading analyst in this area is Chris Berninski, who works at Placeholder Venture Capital. He's published books, he's done a lot of good work in the area, but he himself says that the market is essentially trend-based at the moment. But he believes that it will very quickly converge on fundamental models, but we're just not there yet. What's the takeaways from the presentation? The takeaways are Bitcoin is an extremely robust and extremely strong technology. The reason it has survived to today is because it's focused on becoming as decentralized as possible and getting as many computers running the network as possible while having a really, really secure approach. Altcoins and tokens have launched to compete against Bitcoin. They're very interesting outlooks, but at the moment, it seems they're not ready for prime time. That's obviously a contentious topic, and we can open that bit up to discussion. Another thing to comment with the markets is they are mainly trend-based, and trend-based strategies are the best way to go if you're looking to outperform in the crypto market. But bear in mind that only 10% of people will outperform. So for the vast majority of people, if you're not willing to put the time into analyzing and studying the market, the best thing you can do is just buy it, forget about it for 10 years, and come back and thank me. If you want to find out more about me, I publish my own research and content. You can sign up to my newsletter, adaptiveanalysis.substack.com. I also have, yeah, everybody take pictures of that. Boom, boom, boom. A few more pictures to go. Nice. And I also have a book on Amazon to break it down, crypto analysis. Everybody take pictures of that.
How many you sold so far?
And I also have donation.
You can't ask him all of that. That's like asking him your age.
Yeah, no, I'm just guessing him.
Okay, guys, let's decentralize the meetup. Let's hard fork, soft fork. If you want to have any Q&As or want to discuss among yourselves, or if you want more talk about altcoins, let's do that. Yeah, I'm handing over to you guys, or to Auntie.
Yeah, anybody has question or something to
Yeah.
So a quick one. So you've got some smart money going by the altcoins. I think Google was going for Ripple, and you've got various like Facebook others applying into other coins. What's your kind of take on that? They're very smart people going into various other currencies. They must know some things. And what's your take on that?
So is this like JP Morgan and Facebook launching their own blockchain projects?
No, more so that some people that are going into certain coins like Ripple, I think, was Google's early adopter, etc. So there is smart money going into that.
Like in terms of investment?
Correct, that's right.
Yeah.
Yeah.
It's really interesting, I find, because we essentially have like some of the smartest people in the world placing themselves at both sides of this debate. We have like the most recognized venture capital firm, Andreessen Horowitz, strongly backing Ethereum, and like dApps being built on top of Ethereum. And I don't really want to like discount that or anything, because these are obviously really, really smart people. But I believe they're essentially using like the viewpoint of a centralized world and trying to place that into this new decentralized world where you can buy up a whole load of something and get a lot of value. Because essentially that's how you outperform the normal venture capital world. You get huge shares of Facebook when Facebook is not known, and then it goes way, way up in value. But I believe the real value proposition from decentralized protocols is like the opposite way around. It's better when it's more diluted, when the network is more decentralized, has a wider governance. So yeah, I believe this is just companies trying to force themselves on projects to make a return. And the interesting thing is time is going to tell which side is right. Yeah, back there.
That chart that you had before, like a few charts ago, and it had the long term for main people holding, the realized cap.
Yep.
Where can you get that chart?
You can get it on
Buy your book.
Exactly, you're hired as PR. You can get it on coinmetrics.io or .com, and you can also get it on Woobull.com, which is Willy Woo's website.
And is that's moving live sort of thing on those sites, is it?
Yeah, it's moving live on them sites. Yeah.
So what was it, Coin?
It's Coinmetrics. Coinmetrics is a really, really good data company. Even though they have like a premium package, they have loads of data which is free to use.
Is that a free one?
Yeah, this is a free one. Yeah. Yeah, like actually most of the data is free, because like this is on-chain analysis, so it's assessing the blockchain. The blockchain is all open data. So essentially what these companies are just doing is they're putting into nice charts that are nice and readable. And then for like premium data is essentially them working with institutions to generate insights. Yeah. You have a question?
Yeah, and just to follow up on the centralized thing, I'm just, what are your thoughts on the rumored Facebook coin? And how that would, I can guess from that you are not a fan of centralization, and Facebook is like centralization incarnate, but how do you think that might impact the game if Facebook drops? They talk about branding, name recognition, people know Facebook.
Yeah, I don't really think it's gonna like impact the decentralized game so much. I essentially just look at it in a way. They're looking at like making extra revenue streams. So they look at making a currency which operates across a decentralized protocol. But how decentralized is it really? Like if the government?
Not at all, I'm sure.
Yeah.
It's Facebook.
It's 100 nodes. 100 nodes paying 10 million each. But out of interest, how do they? Where's the revenue model there?
So essentially, if they have their own currency, they might be tapping into a market which they don't have already.
So it's a user onboarding thing. They're not actually making it.
Well,
it's free transactions.
Well, that's how I look at it. Like they
So
own
I-
WhatsApp. So if they launch their own currency on WhatsApp and they're getting like even a minuscule fee from these transactions, they've essentially increased an extra revenue on their income statement.
It's zero fee quite explicitly. I think.
Oh, it's a zero fee?
Yeah. But it's I see the kind of user onboarding thing.
Yeah, well, maybe it makes it more attractive to be a WhatsApp or Facebook user. Like I don't know the ins and outs
then
of
the
it. So.
developing world as well, where no one has bank accounts.
And what's it called? WeChat has their own currency on as well. So maybe Facebook want one of these.
Money's probably the data, it's like you.
Yeah.
So besides all the price points and stuff like that, and which coins are good and Facebook coins and stuff like that, what's, just so all the people here to learn, what's the long-term sort of thing for Bitcoin? Is it a store of value, or are you seeing it as a transaction thing? Like, why should they think about getting it in the whole world? You know what I mean?
Different people have different opinions. I believe it doesn't really matter because the protocol has what it offers and people can use it the way they want. They can use it as a store of value. They can use it as a medium of exchange, exactly. And like the protocol doesn't really give a shit about what you want to use it for. It just has its rules, and you can either use the rules or you cannot use it. It's up to you. Yeah.
Kind of going along that same line, thinking about the end game, if you will, for Ethereum. In my simplistic view of it, from what I understand, I think that is more like you compare it to like the Android operating system that others can build apps onto that'll be helpful in supply chain networks or in finance or in other areas. Is that the right way to think about it, or am I way off base?
I'd imagine maybe there's more like Ethereum experts in here that would be better able to comment on it. But I believe that their vision is like a decentralized world computer where applications which are existing now gain benefits from transitioning to the decentralized infrastructure based on the properties of like immutability, trustlessness, etc., etc. But even they will admit themselves that the protocol is just like not ready yet. It doesn't have the throughput. It doesn't have the like the security behind it. We're seeing like experiments where they're trying to move to proof of stake, and it's taken a long time. The applications which are being built on top of it aren't really receiving much usage. We have a bet now as well between Jimmy Song and Joseph Lubin that will Ethereum have 5 applications by 2023 that essentially reach the same usage as a successful app in the App Store or Google Play Store. The bet is for like $500,000. So it'll be interesting to see who wins that. Yep.
This graph here, I think, is quite interesting, certainly from a long-term perspective. But from a short-term one, I noticed on the previous two boxes that the blue line never breaks through the orange line immediately and continues. It either consolidates or tests underneath for what looks like about a year, 6 months to a year. So in the short term, is that a concern? It might retest, because if it does, that's a big price drop to the orange line from here, right?
What
If we
are
go
you
like
referring
the
to?
current price, we're currently at what, 8,000 now.
Yeah,
If we retest the orange line,
if you retest the orange line,
yeah. So I mean,
and you have to sell again, is that a concern?
yeah. So you said you're bullish, or what was the guy's name?
Willy Woo.
Willy
said
Woo
it's bullish,
bullish, but
It's not like this strategy is guaranteed to work. It's just
yeah, sure. But this is a long-term chart. But
the strategy says if the blue line is over the orange line more than 6 weeks, we are out of the bear market, and that's why the square is closed, not open. So we're over the orange line more than 6 weeks, so we are out of the bear market.
Right. I guess what my question is he bullish short-term as well as this? I mean, this is medium to long-term.
He's bullish short term. Willy Woo is bullish short term.
He's like, is he not? He's bearish and like short term being like the next month or so. Because he had that. What was that tracker of the 3 lines? I can't remember what they were, and it was well above that, and it's gonna come back down to that. I'm not really sure where.
Yeah, I have no idea.
Yeah.
But Willy Woo is present tomorrow.
I mean, if you can trade for only a month, don't trade now. You're gonna trade for 6 months, you wanna sell, buy now, and 6 months later you wanna sell, then maybe you wanna buy now.
So this,
I mean, it's a great argument.
like this here is as you said a really long term one, and it's just indicating that when it's not really saying anything. It's not saying buy now, sell now. It's just indicating that when this blue line is below the realized cap, that all the long-term holders, the market price is so depressed that they've actually lost money on how much they bought Bitcoin for. And that has been in the past, which is only 3 times, a very, very good time to buy.
Yeah.
But yeah, you can't have like statistical significance based on
Sure.
3 times. And there's nothing to say that it could not just drop below here, come way down here, but would still indicate that it's pretty good time to buy.
Sure.
Yeah. I don't know if anybody else like has comments or wants to like speak among themselves or anything like that. Yeah, Sasha.
Thanks for the presentation, that was amazing.
Thanks, man.
Yeah, and if anybody's interested in joining the crypto community in Bali, reach my and me. We have a Telegram group here, where a couple of those people are already here. So if anybody's interested in joining the community, reach out to us, head into the Telegram group, and then you can discuss any topic, like a beginner or more advanced stuff.
Yeah, sounds good. Nice. Anybody else? Yeah.
Do you have a view on MakerDAO and like that whole thing with kind of like stable coins, USDC versus DAI and all that?
It's a really complicated system. I don't know the ins and outs of the technicals of how it works, but I believe the system is as robust as the underlying protocol, which is Ethereum. And I don't believe Ethereum is extremely secure. Like I don't believe it's as secure to the extent that Bitcoin is. So I don't know if it's long-term viable, to be honest. Yeah. Andy?
What do you think the likelihood is of the Intergovernmental Panel like regulating it and trying to shut it down? Was it like Bill Gates said something about he didn't think crypto was good because of the criminal potential to use it?
Criminals use dollars too.
Hmm?
Criminals can use fiat money just as easily.
Yeah, but
the
it's
the
like-
argument's just not really.
It's a lot easier to move a large amount of crypto, right, than it is to move like a physical amount of dollars.
And there's advantages and disadvantages to both.
So what?
To using fiat currency or crypto for crime, there's advantages and disadvantages.
But it's easier to move like a large amount of crypto anonymously.
Yeah.
Yeah, but it's not
I agree.
easy to transfer to change it to fiat again after.
Centralize it.
So sometimes it's easier to just get US dollar, ship the US dollar, and to spend the US dollar.
Bring it to Switzerland.
Yeah, it's a question for the Telegram guys, or anyone really. I was curious. I was here in Bali January and February of last year. I came to a lot of crypto meetups. I've been gone since then. I just came back. I'm curious, was there like an active meetup scene during like the bear market in the last year? Was everyone kind of like slumbering and then recently coming back, or were people still meeting during the depressing price times? I don't know if anyone here knows. I'm just curious.
Maybe that. Maybe that. Sure.
Yeah.
The real crime.
Yeah. The raw crime. Everyone needs the token.
It was the time to build.
Fiddling, right? The BUID.
Fiddling.
Yeah.
Please.
So I've been out of touch since the last bull market, and I know back in that time, electricity consumption was a huge concern. I was wondering if that's been addressed, or if the cryptography involved to solve the required algorithms to mine, if there's like a theoretical limit or bottom to that to address some of those concerns.
The latest research on that, which was released by CoinShares last week, puts forward evidence that 74% of Bitcoin mining is sourced by renewables. Research which was released on the 12th of June, which was yesterday, estimates at 0.2% of global electricity, but if it's sourced by renewables, I don't really like to see much of a big deal. And I believe like there's a lot of talk about making the system more efficient to use less electricity, but actually like one of the features of it is that it's so difficult to mine Bitcoin and create Bitcoin. It's what like generates its scarcity and the security of the network. So if we were to make like a system where it was like really easy to mine or create it would be making a big trade-off. Yeah.
Do you or does anyone have a concern that ultimately it doesn't really matter how trustless or decentralized it is, that ultimately governments could just turn around and go, bang, it's illegal. That's it.
Probably helpful.
I mean, like they did it with gold in the 70s in America, right? It was like ownership of gold is now
Yeah,
illegal.
but you just said governments, and yet now you said US. It's one government to all the governments in the world. So if you want to shut down Bitcoin, you need every country in this whole world needs to criminalize Bitcoin.
Like even if that happened as well, like people could still
shows
run
why
in your
it's
basements.
No,
Shows
but
why
not really. It would just have to be the US, because ultimately the US controls
Like-
the money, the global money supply.
Imagine-
by the dollar.
Yeah, imagine the US was like, right, anybody who is mining Bitcoin or is anyway involved in the network is subject to a 10-year sentence in jail. And any countries that we do trade with are going to be cut off as trade partners if they're anyway involved in Bitcoin. So that's a like potential threat to the network. But still, there's going to be people who are running the network in their basements. There's going to be countries who don't give a fuck that are just going to still run the network. That's the beauty of it. And as well, like it's a bit more technical, but the network actually adjusts based on how many people are mining that. So if there's a big drop off in the amount of people who are supporting the network will adjust every 2 weeks to reflect this, so that the network essentially is secure based on how many people are supporting it.
And the state is stupid, so the more they try it, the more people will come in and buy cryptos. Because we had the same discussions in Switzerland where we had the government and the FINMA who stepped in and took the FINMA license from some companies. And the more you do that, the more people will go into it because they say, okay, we got you. So I guess there is no, it's just like a,
It gives further credence to the reason it was created in the first place.
right. It's just like a confirmation, right? If the state is coming in, there will be just more people doing more stuff, and
It's also
just like a
important
confirmation.
that Bitcoin stays with 1 megabyte of block size. Yeah, because if it's 1 megabyte block size, you can run it through the 4 network. And now you can run your Bitcoin node anonymously, so nobody can find out that you're running it.
It also just looks like it's going the other way. There is like regulation, the SEC talking about it. There's this government body. There's things going on in different jurisdictions. It looks like it's going.
But what about manipulation then? Does that worry anyone?
So I think it could be the other way around. It could be great that like we can start regulating it, buying up, like evangelizing it. Like imagine the nation state, the USA buying up. Like there's really 8% of the supply of Bitcoin. Then it kind of devalues the idea that it's decentralized, it's essentially owned by the current corrupt government systems, which would be great for us. We get rich off it, but nothing will really change financially. I think that's what we need to see.
Is countries that are being affected at the moment with the devaluation of their currencies, such as like Venezuela, what's their use at the moment with Bitcoin? Because I've heard that it's gone through the roof. So in saying that like a ban or whatever, or government's trying to take over and control a lot of things, is that a proof that it actually survives or can be used in real life situations?
Sorry, what was the second part there?
Well, is that a proof that the public would then be able to actually take it on and can't be stopped and they'll use it in their real life activities?
In Venezuela,
or a value or a transaction or whatever.
It's for sure the biggest use case and the biggest testament to it is that in countries where the central bank and the government is fucked up, they can turn to a currency like Bitcoin, and even though it went to a third of its value in 2018, it's still devalued less than the Venezuelan bolivar. Yeah.
But also Switzerland. I mean, the National Bank of Switzerland, they want to launch e-franc, right? So there are also discussions to get the money supply on a blockchain and then just like increase or decrease the blocks to supply, like have an e-franc, right? So they have like
I think the main incentive to do this is to control every transaction, so they know exactly what to take away and when. So it's actually the total opposite of what we want.
These projects are kind
of. The state will do that. It's just a fight between the state and us, I would say. So they will step in and they will come with their own projects, I guess.
Yeah, of course. And these projects are kind of bullshit because, like, when a centralized entity or a state can just like manipulate it and has like complete control over it, it's undermining the very principles that the network was built on. And really, it's just more like a reaction as opposed to a proactive approach. They're just like on the back foot and they're just trying to see, okay, what can we do? There's a lot of hype around this. Maybe we can issue our own blockchain project. I was actually did a talk in Mercedes last year as well, and they have a lot of fucking hype about blockchain. And I essentially told them that like the blockchain cannot really be used for what they want to use it for. And then I was speaking to the blockchain team in there after a presentation, and they were essentially saying, yeah, it's just more a marketing ploy than anything. They were just using blockchain because they believed it would give them like a marketing advantage and they could like publish it in newspapers and stuff.
Anyone has more questions or something to share?
You want to take over?
I'm taking over. Oh, good? Was that useful?
Very
Yeah, let's give applause for the thank you for coming, and then sorry to squeeze all you in this room. I hope it was okay. Yeah, thank you.
Thanks, everyone.
Thank you, Jan.
Anybody
Wait,
wants to
sorry, what time is Willy Woo tomorrow? What time is Willy Woo tomorrow?
5:30 again.
5 p.m.
In blockchain too. Yeah, even though I'm gonna go again. I think it's gonna be like very the same.
Yeah.
I found the first one super impressive.
Yeah, me too.
Yeah.
Make the job.
Oh, thanks, man.
Yeah, and you got text.
Yeah, I think
so. Yeah.
I'm not gonna be all
It's good to see you.
next week.
Oh, yeah, you would know.
Thanks for organizing.
You're amazing.
Thanks.
Yeah, so proud of you.
Thank you for your talk.
Oh, thanks, man. See you.
Thanks for coming.
Thank you. Thank you.
That's the thing, I don't know.
Yeah.
What is that?